We're going to talk about what would happen if you put $2,000 in the market in 2018. So hi everyone, welcome to the channel. If you are new, subscribe, hit the bell button, leave a like and comment. It makes a big difference. So a few days ago I talked about, well, this is actually an ongoing series, isn't it, where I spoke about how, you know, the cryptocurrency market, you can make a lot of money, you can also lose a lot of money. I explained the dangers of that as well. I then did an example of what my portfolio did in 2018, well 2017, 2018. Then we've done the next variation was, you know, starting off with $2,000, start of this year, 2020, what would it be? Let's talk about the other side of the coin. Let's talk about that fear that we've all got, is FOMO, is jumping in when it's about to turn and losing money. Now, I made a few little things in that video in terms of how bulls get wrecked, and I'm going to explain it in this video fully. Why I still say this, I tweet this quite a lot. Please do follow me on Twitter, you've probably noticed a lot of my tweets anyways. And people don't agree with me, and I want to explain how it happens, because that caveat of buying into something as an investment with that greed mentality that you want to make money, you risk more. Now, the flip side of that coin is obvious. You know, people look at bears. Oh, you're bearish. Oh, bear. Ooh, I was known quite normally as a bear. You know, people often say, God, you're so, you know, measured and realistic and patient. But some people took that as bearish, and it's wrong. I go with the market, I look at market trends. If we're in a bull trend, I'm bullish. If we're bearish, I'm bearish. It's simple as that, right? I'm going to teach you in this video, and this is probably one of the best lessons you're ever going to get ever in terms of trend analysis, is when not to buy a coin. Because the trend is bearish and you must wait for dollar cost averaging areas, not keep buying the dip that keeps on dipping. You only buy the dips in an uptrend, okay? You only buy the dips when it matters, right? When you can see the trend. You do not buy them when it keeps falling. Simple as that. Right. So, I've already done the maths. I've already worked it all out. Now, when you look at a chart, when you look at coin market cap today, it's like, whoo, hello, up how much in the last 7 days? Looking quite good. It's, you know, the market's growing. We're now at 511 billion market cap. It's jumped up 100 billion very, very quickly. It's huge, right? Things are good. And people are starting to now get into the market and FOMO. Now, we need to be careful. You know, anything that I could say could lead in a loss. Obviously, anything that I say is not financial advice. This is why I do more educational stuff. I don't want to pump stuff to get people excited. But what I will say is this. If you invested in 2018, you would have been dog shit in terms of the analysis of what happened. But this is why this video has been made, to kind of show you that if this happens, how to correct it, how to fix it, how to, you know, believe that you're doing the right thing anyway. So let's go to the chart. Now, let's just talk again about bulls and bears. You're always going to get people that are bullish no matter what, but they do certain things that is required of them to get a good average position. Dollar cost average, we're going to talk about it. But what we're going to do first, we're going to go through the core assets. We've changed one of the assets because Chainlink wasn't around then. We're going to look at Bitcoin, Ethereum, XRP, and Litecoin, right? The obvious ones. Obviously, XRP wasn't on Coinbase back then, but overall, doesn't matter. But what I will say is this. I got a bit of a shock when I did these calculations. Bitcoin is the only one that's on an up. XRP, well, Litecoin, awkward, right? So, the first one is Bitcoin. If you bought basically 1,054 days ago on the 1st of January 2018, happy Christmas, happy New Year, well done, you're going to get into crypto, you'd be up 32% right now, okay? You'd be up 32%, and I'll put the result on the last chart in a second, right? The next one was Ethereum. If you bought on the 1st of January 2018, you would have been down minus 31%. That's over again the same period of time, down 31%. Moving on into Litecoin, you would be down a whopping 63%, which is quite savage. And on to the last one, XRP, wait for it, give me a drum roll, boom, 84.4%. Basically, buy an XRP at $2. But But I know people that are in this position, all right? It happens. I know lots of people that bought $1 in XRP. I know people that bought Ethereum like $900, Litecoin $200, thinking it's the next best thing. And certain people have this in their locker, buying low to dollar cost average, or just leaving it and hope it comes back to break even. I made a tweet and people laughed at it because I said, the thing you do not want to hear from an influencer is, I'm finally broke even on Bitcoin when it hit like $17,000. Some people are in that position as influencers. Yeah, scary. Be careful who you listen to. Anyways, what I'm going to do now, I'm going to put these on this, right? Just to give you an idea. So you started off with $2,000, right? Your BTC would be worth 660. Your Ethereum would be worth 345. This is where it gets fun. Litecoin is worth 185, and the most important one that we all care about, really we don't, is XRP being really shit out of luck, is now worth 80. So that is what $2,000 would have brought you. Essentially, you've halved your entire investment through this basket of coins. If you went all in, and I know people did, on XRP, things would be very, very ugly. So that's what would have happened, right? You would have made profit in one and would have made significant losses in the others. You know, they're not, small losses. These are gut-wrenching. And in all honesty, there's a lot worse in the market. So let's go about basics before we start and talk about this. Fundamental analysis, research, development of coins, what you bought, what you picked, all kinds of information that you should have retained and got anyways. As an interesting party of cryptocurrency, you should always have that. If you like XRP, there must be a reason why. If you like whatever, right? The fundamentals are, you do not want to buy the dip that keeps on dipping. Now, when you look at let's look at the XRP chart, perfect example. The first chart that you need to look at before any chart is even into consideration is the weekly chart, right? I know that there is people that are still holding this up here, right? Or maybe sold it, whatever, right? But when you start looking at the trends, this was just a monumental pump. Monumental. And it makes it really hard to analyze as well, realistically, when you look at it, the grand scheme of things. If we move on to the world of obviously Ethereum, again, monster run, but it kind of dribbled down a little bit easier. It kind of went on a bit of a slope and it retraced back up, all kinds of good stuff. So when you start looking at these higher time frames and looking at the chart, and I'll remove all the noise, you can see that things are looking quite ugly when you see that the moving averages, obviously, for example, a great example of this, are trending below, especially on the 3-day chart, the weekly, and into the monthly. It's like, oh, when you look at the monthly and it looks like this, and you're thinking, I'm going to buy this, this looks great. You shouldn't, right? So, I've mentioned this before, the trend is your friend, right? Always is, always will be. And when you look at this monumental rise, the daily time frame is probably the best thing you can ever use. Now, you do not want to buy the coin that keeps on dipping. You want to try and get out and stay out as long as you can within the trend. Now, the EMAs that I use the 8 and the 13, right? That's why they're quite close together, and they do work very, very well. You can see very, very easily the uptrend, and obviously how it goes into a downtrend. It didn't even cross over here, just carried on. Crossed over a little bit here for a bit, but it monumentally just crashed after that for about, maybe 2 months, give or take. Quite a long time to just sit out of a position. But ultimately, if you're sitting up here and you're thinking, right, I've actually bought at stupid levels. Ugh. So the thing with Ethereum is, which is probably going to hurt people more when you see this, is if you bought on the 1st of January, you bought at $732. It went all the way up, doubled your money, and then went all the way down. I mentioned this in a video not too long ago that I know people who have Neo, for example, have bought at like $6-7 and seen it go all the way back down to their entry level, going up to $200 in the process. That could have been you on Ethereum. So 8 and 13 is a good one if you want to use these ones. These are really, really good. But the one, if you are more of a beginner and you're not on the chart as much, I've already mentioned it on a previous video. Look at moving averages and look at the Fibonacci numbers. The best one for the daily, in my opinion, for the exponential is the 34, right? Simple lines, 34 is very, very simple. If you like using moving averages, just a simple moving average, again, similar sort of ilk, but you can look at the 20. But when you start looking at the trend, you know, you can get out here, right? Simple that. You know, when that breaks below, obviously be patient. Don't just, you got to wait for a candle closure, and you got to wait to see if it is confirmed. If it is in a downtrend, happy days, just stick out of it. It goes for a retest. This is where people FOMO back in. They're like, oh, it's going to go carry on going up again. But you got to look at the overall trend. If you start seeing that this actually no, well, why? Why should you not jump in that? Not because of the EMA, because of the fact of this. You've got a trend. So you got a high, this is a low. Lower high, lower low. Hello. You know, you got to look at where's this trend going. It's going savagely down. And this gives you an insight and helps you to figure that out. And that's only the EMA 34. When you then look at other moving averages that you can use, other combinations, you can easily use, as I said, a moving average. There's two different ones you can realistically use for this purpose, right? The first one is the 20, and I've already mentioned this in a video. You know, moving average 20, easy, right? Why? It's a bit faster, and it obviously it holds the trend in a much faster way. But the one that I feel that works really good on the daily is the 50. Simple moving average on the 50, and you can see it there, right? Remove it. That is it. Simple. It sways a bit more. It's a bit more weighted in that way. It's a lot more measured, and it works very, very well. It actually is quite a good number in the stock market if you trade stocks. Currently $500 Ethereum, which is quite savage. So that's a really, really good way of doing it. Now, I mentioned it. You don't want to buy the dip that keeps on dipping. Trend analysis. How to identify a trend? Well, if the coins are above this, it's in an uptrend. If you start seeing this formation of higher highs, higher lows, higher highs, higher lows, continually going up, it's in an uptrend. You buy those dips. If it's the other way around, it's lower lows, lower highs, lower lows, lower highs, whatever, you're going to have a problem. You do not want to buy it. And ultimately, we need to then talk about dollar cost averaging. You then, if it is in a downtrend, you wait for confirmations, right? When you're looking at this chart here from 2018, you've got all this data left, right? So if you're seeing this and you're thinking, well, I'm not going to buy, right? I'm just going to sit and chill, right? I bought at the tops here. I'm not going to put any more capital in, because what people do, they put capital in, they run at it like, I'm going to buy whenever, don't matter. I'm thinking it's going to go to the moon, it's going to retrace, it's going to correct. So 6 months later, it's down $80. Like, fuck, you ruined yourself. So you need to look left. And if we're doing some analysis here, we know that there's certain areas here that are very, very obvious. I don't know why I point at the screen, you can't see it. There's an area here of interest. Now, why is this interesting? Because it backed up a little bit closer to home here, right? So what you do in this situation is simple, right? You know that things are getting horrible. Like, oh my God, I'm losing all my money. Do a simple Fibonacci for starters. The first thing you need to do, so look at the start of the move. So you could probably go, well, let me just, maybe from here, start the move, say. And you can look at this level here and you think, right, cool, what has it got? Now, obviously these are quite subjective. You can look at different ways of doing this, but that looks like a really good solid place to start. Why? It's had a big massive impulse, it's pulled back, and then from there on it's kind of went on a big trajectory, right? It also has a lot of confluence with other levels, right? When you kind of look at where things have kind of stopped and turned around in the past, but this is the top coming back down. Now, you would have already hopefully in your head thinking, well, actually, it doesn't matter what happens, I'm kind of happy with it, but you got to think, well, where can I buy? Where can I look at buying this asset? And ultimately, it gets a lot lower than this region. Obviously, we know that. And that is where we're going to talk about it, because this is where it gets even lower, but you got to start selectively buying dips, like proper dips, like the drops essentially. So first level is obviously here, where this has been resistance and where this has been support, and ultimately, guess what? It's actually turned the market here. Now, that's obviously one great place, especially if you've been up here and you're looking to buy and you think, I've got a bargain, but it also dumps lower. Now, this is where it gets really interesting when you start looking at these sort of moves. Why is it important? Because if it carries on going lower, you've just got to wait for the trend to change. As I say, look at the trend. What's happened? We've pulled back up. We went above into the trend. You're probably quite happy thinking, oh, actually, it's doing all right. But it comes back down again because the trend has reset. When you start looking at this and you do the opposite way around, you got a problem, because it's actually hit resistance levels. Went from here, this has found a temporary bottom, it's found resistance, it's continued the trend going upwards. Well, guess what's happened here? Well, actually, you know, it's continued to go even more south. And the scariest thing is that extension is not far away from the all-time bottom. Obviously this goes into minus. This is a huge time frame, by the way, so it won't really work out that well. But you've seen this chart and it carries on going down and down and down. You just need to look at previous levels, and if you zoom out enough and you start seeing what's past data and it's gone below your previous buy order, well, guess what? You mark it on a chart. Simple as that. All you need to do is look at this. This is June, July of 2017, right? Look at those levels. Now, I know people are screaming and saying, well, it's obvious to see this because it's going back in data, but that past data is telling you where things are and where things could potentially go. Now, with that being said, your next level of interest should be this, $300 or $400. Why? Because it's perfect. It is the perfect level. Why? You've got resistance, resistance, support, area 1. The next level, look at this region here. Why is this important? The way it just turns aggressively and starts a new trend. That is $160. And then you've got this level here. Why is this one also important? Well, because of that. If I then zoom across and look at these levels, look at how they are reacting to prices. And again, we go even lower. Crazy levels. And then we finally go up again, turn around again, hit these levels again on the nose. Past data is amazing. Now, I know that people will probably think it's very, very subjective, and yeah, it can be very, very subjective in that way. But these past levels will tell you where things have turned around in the past. If you know where things have turned around in the past, you can kind of make a note of them and be understanding with them. That's why I use Fibonacci numbers. Even though it goes a lot lower than the previous structure, it's very, very interesting to know where it's been before that structure, where supports and resistances are. I do a lot of videos on when to invest in coins, right? Ultimately, a lot of people disagree with my thoughts. When I said about Cardano going to a certain level, a lot of people disagree with me, and people actually came onto my Twitter and apologized, saying, actually, you were right, I was wrong. People's mindset is, it's never going to go that low. Would you? I didn't think so. That's where my biggest mistake was. I did not feel that $1,400 Ethereum would ever go back down to like $82. Yeah, but it happened. And you've got to look at that, and those structure levels were there. And if I go back in time here and look at where this $80 region was, if you're looking at this whole level here, this level is vitally important. Look at the way it's held the support in around this region. Look at the way this is wicked into that $120 region. Look at how it's kind of been in and around this region in the past, and it's been holding a support. Even if they do not hit, it's wise to have an area on the chart to pinpoint of a potential entry if things get bad. So that is how you dollar cost average. You find previous levels of support or resistance in the market. The first step is obviously the Fibonacci. If you've got a big massive move, see where the key levels are, because it could carry on going from that point. If it carries on being bearish and you've got these simple moving averages to tell you if you're in a bull trend or a bear trend, you need to be aware of it. Now, obviously they do lag, so it's entirely up to you what style you use. There's multiple different EMAs you can use. Personally, I think the EMA 34 is probably the best one for like a beginner as a Fibonacci. It's not too jumpy. You can kind of maintain a trend a little bit longer, as you can see here. But you can also be able to take profits and actually try and accumulate a little bit more if you can. But when things go fully bear, and it really is quite ugly on multiple time frames, the best thing you can do is zoom out as far as you can and see where previous levels are. Looking at this overall now, if you're thinking, right, start of the year, $88, we are now at what? Give or take 500. Where can we go? Well, already on my chart, I've got some key levels. This is a big weekly level, $300. This is a 618 from this top to one, I think it was that top actually. So $240. But you got all this noise here of like stuff in turning around and stopping and starting around those levels. What if we turn around from here and go down to $100 again? Well, you're probably going to buy, aren't you? Hopefully. So I hope that video does help. Obviously savage in terms of what would happen, but the trend is your friend. The higher the time frame you go, the more you see. You look at the 3-day chart, you can kind of see as well how this trend line works very, very nicely. How it can just kind of show the momentum of the movement of the price without too much noise and too much fiddly stuff. So I hope that does help. Crypto market's currently mooning. I'm getting quite excited. I want to look at my portfolio, but I'm not. I'm going to be measured. But please do not buy a coin because it's gone stupid levels. Buy it when it's at its lowest points. But remember, uptrends buy the dips, downtrends dollar cost average. Look at past data and see where the action has been in the past. That could be a great place to start.